Hey everyone, and welcome back to the channel. In this clip, Checkmate dives into Bitcoin's recent surge past 100K, unpacking the psychology behind investor behavior and the market's resilience amid global economic shifts. He explores how on-chain data reveals holder conviction, Bitcoin's decoupling from equities, and its emerging role as a sound money asset competing with gold in a transforming financial landscape.
So when we were speaking last week, you said 100K was a pretty critical level. Why do you think that, and what's happening now? Is this the bulls back in control? Are we off to the races?
Yeah, so I think the key area here, you'll often hear us in the on-chain world talking about the short-term holder cost basis. And the reason why it's really important, it's the center of gravity for all the people who recently bought. And from my perspective, and what I actually think on-chain data is so powerful for, it's all about psychology. And it doesn't matter how long you've been in Bitcoin, your whole net worth can be swinging around with the price, but you are going to be very anchored to your last buy. And we all know what it feels like. You put a couple of grand on, two seconds later, the price goes down 10%. It feels shit. Doesn't matter how long you've been in there. Doesn't matter if it's peanuts compared to your stack. It hurts. So most people have this recency bias, and they focus on that particular their most recent purchases. So the short-term cost base was around 93K, and the market broke above and then started consolidating across it. And the other thing that was really important is that in that top zone between 93 and 100, there was a stack of coins. I think we spoke about this in a previous edition. The amount of sell side, and that also means buy side, that occurred in that topping range is absolutely massive. And so many of those people were waiting and waiting and waiting for the price to get back to their cost basis. And the moment that it did, that is the point in time where anyone who's looking at the world and tariffs and, whatever else is going on and saying, I don't really like where this is going, this is the kind of environment where they start to de-risk. So as the market comes back into that supply zone, they start to de-risk their positions. And what we're basically, if we got above 100, you've kind of cleared that zone. So all those folks who bought in February and January and December, they've held a high price, but they just hodled through the correction. They had the opportunity to sell and de-risk, and most of them just seem to go, nah, I'm good, let's go.
Check's analysis of Bitcoin clearing the 100K supply zone shows strong investor resolve, as many held through a correction despite macro fears like tariffs. This lack of selling pressure signals bulls are steering the market. It's a key moment highlighting Bitcoin's growing stability in turbulent times.
So breaking above that supply zone was just kind of a clearing out of any concern, saying, all right, the bulls appear to be in charge. The sellers didn't come on board. Overall, it actually looks pretty good. So from that point in time, we don't want to go back below the short-term cost basis. Again, it's not a perfect level. It's just a zone where lots of people's recency bias is. If we stay above 95 and keep heading higher, to me, it's happy days.
Yeah, it's a funny one, this move, because the first time Bitcoin went over 100K, which was literally when we recorded the very first show, this Knew What Bitcoin Did, I was watching it like a hawk. I was expecting it to happen. This time I'd kind of stopped looking at the price a bit. It was a bit boring. Nothing had happened for a while. And then last week I looked at the price oh shit, it's going to go over 100K again. It kind of took me by surprise. And there's not really been very much bullishness on Twitter. Everyone's arguing about op return, which I do want to get into with you. Is that a good thing that this is happening while the market's kind of a bit subdued? The sentiment, is a bit subdued.
Yeah, no, I think so. And that's again why I think the psychology is so important. I've become acclimatized to seeing an 85 and 90K Bitcoin, right? I kind of opine and wish that we had 75K Bitcoin again. And I remember when it sold off, whenever it was in April, and I was sitting there on the couch and I'd been tentatively stacking sats because I just had this feeling we're in that air pocket that we talked about. I was we're probably going to get down to the bottom range. And then I was just sitting there on the couch 6 p.m. and I just see it go to 74. And I hadn't intended to do this, but I really did actually empty my bank account. And I spent way more than I should have, but I was I just can't. I can't not buy 75, 74K. I just have to do it. So I just dumped everything that I could in. And over time, I think people just become acclimatized to these new ranges. So, 75 was really we might tag it. And we really did just tag it and then away we went. But people got used to that 85K range. people don't think about 40K Bitcoin anymore, right? 20K is a thing of the past. And, below that is even more so. So markets are very much a confidence game. And I think people just become acclimatized to it. And, that's ultimately when we look at all these things. People become acclimatized to a new price range. When we correct, so people got pretty used to that 95K range. That's why there was so much buy side. And then the market gave them 75 and gave them 85 and said, you liked it at 100. Do you like it at 75? Are you willing to put up? And they did, right? The bulls stepped back in and said, yeah, you know what? I actually like 85 as well. So I'll just keep stacking sats, keep buying. Price goes higher. And most likely, right? Again, we can never tell the future, but most likely we're headed for some new range to say, well, okay, you liked it at 100. How do you like it at 120? Can you support it at 150? How high can you go before the bulls finally run out of steam?
Check's impulsive 74K buy illustrates the emotional allure of Bitcoin's price dips, a sentiment many investors share. His note that 85K or 95K now feels normal reflects how quickly market psychology adjusts to higher ranges. This adaptation signals Bitcoin's deepening acceptance as a mainstream asset.
Yeah, it's funny, before we look forward, maybe we could kind of look back at the last few months. Because with all the tariff stuff, markets completely melting down. I think if you've asked me 6 months ago what Bitcoin would have done in that scenario, I would have guessed that it would have sold off way worse than it did. It held up pretty well. Were you surprised to see that?
I was. No, I really did think that it held up remarkably well. Those phases, there was a couple of data points, and people are talking about it on Twitter as we do, but equities are down 5% and then 5%. And then, there's 3 days of really nasty sell-off. And Bitcoin was down either as much or sometimes less. And then there was this one point in time where the equity market was down 5 and Bitcoin was flat. And these are just these small data points. And yes, it's a bit early at that point to be the decoupling. And lots of people are talking about the decoupling. But every single TradFi dude with a Bloomberg terminal saw that and goes, I mean, that's kind of interesting. And then obviously it sells off the next day and everyone goes, suck it. But if you I was just looking at the other day, look at the Bitcoin chart on a weekly basis, I don't know, the last 2 years, overlay the S&P 500, Bitcoin is basically about to punch through its all-time high on a weekly basis. I think, in fact, by the time we finish this recording, we'll be pretty close to the weekly close. I think it could be the highest weekly close ever for Bitcoin, which is kind of remarkable. And if you look at the equity market, it's just meaningfully down from its all-time high. So there has been a degree of decoupling. So yeah, I think it performed really, really well. The backdrop is obviously gold, just absolutely kicking ass. And I know people are it's up 50%. Well done. It only took you 40 years to get there. But, that's a big move in terms of dollar value and the size of what gold is. And that's certainly been a bit of an anchor for me, saying why is gold doing what it's doing? This is beyond, this is a reshaping the global economy, neutral reserve assets. Bitcoin is the only other asset that really lives inside that bucket. And, if you've got that kind of backdrop with gold, then Bitcoin is going to follow at some point. And historically speaking, for very long-term moves, gold has actually tended to move first.
Check ties Bitcoin's strength to gold's bull run, framing both as sound money assets thriving amid equity struggles. This decoupling from stocks suggests Bitcoin is emerging as a unique safe haven. The alignment with gold points to a broader shift toward assets built for economic uncertainty.
So you see gold as really the leading indicator here, because like you say, it's a vast amount of money that has to go into gold to move it as much as it has. It's been running for all year basically. It's been absolutely flying. Do you think this is going to be a scenario where gold runs first and then Bitcoin runs fastest?
I think so, because at the end of the day, right, gold, this is a fundamental trade. This is a reshaping of how global trade works, how sovereigns save money. Gold is being reintegrated as that neutral reserve asset. That's pretty clear, I think. So when those kind of moves happen, you have to pay attention, because it doesn't happen very often. We really do not see gold bull markets most of the time, right? I talk about the stats for Bitcoin on a daily basis. It goes sideways 40% of the time. It goes up more than 1%, 30%, and it goes down 1%, 30%. Gold goes sideways for 2 decades, and then it just rips to the upside for 10 years. And if you actually compare, I actually love doing this chart. If people want to kind of see how, I use gold as the benchmark. It is the inflation rate over the long period of time. Yeah. And if you price equities in gold, so look at the S&P 500 divided by the gold price, you basically see this 10 years of equity outperformance, 10 years of gold outperformance, 10 years, 10 years. These things come in 10 years. And we had a bit of a pivot point around 2022. So if you think of it from that perspective, we're like 2 and a bit years into what probably looks like an era of sound money. And if you roll that back, right, if they're 10-year cycles, Bitcoin really didn't exist in any meaningful scale the last time that we had a serious gold bull market. So this is the first time that we have 2 genuine competing sound money neutral reserve assets on a global stage. And gold is obviously going to move first because it's the incumbent. But Bitcoin is by far and away the most likely contender. So I think it's a fascinating dynamic, and that's what we're all here for. It's why I started buying in 2019.
Check sees Bitcoin challenging gold as a sound money asset, its smaller market cap promising explosive growth. This historic competition, unseen in past gold bull markets, excites long-term investors. It's a compelling case for Bitcoin's role in a transforming global financial system. This was an insightful conversation with Check, packed with lessons on Bitcoin's market dynamics and its evolving role in the global economy. He revealed how investor psychology, tracked through on-chain data, drives price movements, highlights Bitcoin's surprising resilience against equity sell-offs, and positions it as a formidable sound money contender alongside gold, signaling a shift toward assets that thrive in economic uncertainty. So, what do you think about this Bitcoin conversation? Let us know in the comments section below. If you enjoy this type of content and want to see more, make sure to give this video a like and subscribe to our channel. Until next time, keep learning and keep stacking.